Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is going to be the mini S&P 500 futures contract, front month in nature. As soon as we pull it up, actually we're looking at our wonderful Baidu system. Look at that. One of our key trading models trades Baidu. Wow, look at that. $90,000 in essentially just about 4 years or so. Yep, there you go. $90,000, $10,000 account size required. You're going to trade 1,000 shares. So obviously you need a little bit more than the tank than 9860. But wow, what an impressive system. But we're actually there. We go. We're looking at a chart of the mini S&P 500 futures, as mentioned. Excuse me. On this 18th day of February, 2011, looks like the market is continuing to trend up. As we mentioned, you may have just seen in the client note, positive dynamics. You can actually see it right here. Here's Friday, Thursday, Wednesday. Positive dynamics. These are intraday dynamics. These are proprietary indicators that we use to kind of gauge where the market is likely to head. Obviously, green means bullish, and certainly red means bearish. The bears are in control of the market. And what do we see over here over the last couple of days? It's actually been a quiet, relatively quiet week in our portfolios for the most part. But if we scroll in a little bit, as you can see, on Tuesday, on Monday, it was bullish, 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 bullish. The market closed in the upper echelon. Tuesday was a very mixed picture. The bears were actually in control, but we did see a nice double bottom there. Boom, boom, double bottom with a bounce to the upside following the next day. And did we have support for that? Yes. Certainly all indications were to the bullish side on Wednesday. Full of that bullishness, bullish, 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 bullish. The market did swoon a little bit, a bit of a sell-off. I believe that day was revealed that the Coca-Cola formula had been released, so that, of course, triggered the, the sell-off. That was a little inside joke that we had, but very interesting. Did have a sell-off. Closed in the upper echelon of the day. Could have been a double top. In fact, the bears tried to rally. The bears tried to sell off the market with a gap on the downside, but having said that, it didn't really take. We climbed back above the trend, and once we broke above that double top level of resistance, it's simply been off to the races, save for today. So more importantly, where is the market today? As you can see, we were fully bullish, certainly going into midday, actually making new highs, but really the market has just traveled so much ground over the last 6 months. It's just been really impressive. In fact, you'd have to go back probably about 12 years to see a run like this, but maybe 13 years. But that, of course, was the year 1998 when January and February were like this. And, you know, we all know what happened, at least those of you who have been around for that long, with the Asian crisis, the LTCM capital breakup, the Asian flu, as it were, and that beautiful bottom around October 12th, 1998. And we had, of course, a huge move after that once the Fed stepped in intra-meeting. Should they be inter-meeting? Nevertheless, we had a huge sell-off, and the world was coming to an end at that point. So we'll wait and see how the rest of the year comes. But as we've mentioned, we're certainly going to get some correction. Last week we mentioned the markets trend 30% of the time. They've been trending to the upside essentially for the last 6 months. So we're definitely going to get some choppiness. Certainly, where's the top? We don't know yet. If we actually look over and I guess we could finish talking about the intraday. That's what we're looking at. 1340, really kind of a mixed picture. Not really going to call an ES day trade today. As you can see, the bears are trying to take control of the market now. It's a bit bullish. One could argue a buy setup, but if we had a trade, it'd certainly be a 2, maybe a 3-star at best. We'll go ahead and minimize that and look at a chart of the daily market. There we go. Aforementioned beautiful high or low there, leading to an astronomical gain of 350 points or so in the S&P. All signs continue to point to bullish. As you can see there, bullish, bullish, bullish is the trend. Just continuing to, I mean, there's really no sign of a top there. The momentum is certainly bullish, both short-term and intermediate term. The directional movement is now, the intermediate has come back on board to support the short-term directional movement of the bullish side. Of the equation. So nevertheless, the market does continue to show no topping formation and just trails on higher. So we'll have to wait and see how that's looking. But right now, all signs continue to point to the bullish. We'll take a look at a few of our swing systems. Look at that, beautiful. We'll actually switch over to, because we have what? Another long here in the EM contract. Right there, so we'll go to detailed view. There you see another new high in our swing model, $75,000. What this portfolio or this system has made. There's the MRS TF, not quite as good, about $20,000. MRS YM, pretty impressive, almost $50,000. A little choppy, but certainly the MRS EM is the core of what we trade. For this system, and there you see a new high that this system has made, and this is actually a part of our Q trader, if I'm not mistaken. No, sorry, MSAU, MSAU, the MSA Ultimate Portfolio, the DT, MSAU DT, that a lot of you guys subscribe to, actually doesn't have this, but you lose out on $5,000 in margin requirement, but also you certainly lose out in going with the swing model. On some pretty impressive gains. So there's MRSEM. We're going to go ahead and just minimize that. We'll actually go back to look at our Swing System 5.0, another venerable swing model. There you see had a bit of a tough time. That's why the key with MiniAnalyst.com is we have so many different trading models. The key is to be diversified, not only across 4 markets, but certainly across, and that's just the futures markets, but certainly across systems, different trading models. Different trading models are going to perform differently in different markets. And as you can see, this otherwise incredible system really had a swoon there from around April to over about a couple of months. But there you see, buy the dips, buy the lows, another nice little double bottom right there, and boy, it is off to the races. Almost another $10,000 the portfolio or the system has made, and that of course is the detailed, again breaking out to new highs is the portfolio there. We're going to go ahead and look over at, also we mentioned last week the Triple Threat Trader HR, high risk high return. Big part of the success of that is the Day Trader 5.0 recently, and there you see another new high in the Day Trader 5.0, and of course you see there putting up the impressive winners for the Day Trader 5.0. We're actually going to go ahead and look now at the 9.0. That hasn't been doing too bad. Again, breaking out to a new high, a little bit of choppiness, but $4,000 over the last year or so just per system. There you see the market continue to trail off a little bit, so rather noticeable there. But we're actually going to look for the so there's our Swing System 15.0 that we've mentioned several times. This is a key swing system that we offer. Beautiful. Look at that. Well, actually, you don't even have to put that on detailed. But if you do, there's another new high. $50,000 essentially was what this portfolio has made. So how have our portfolios essentially been doing over the last week? As mentioned, it's been kind of quiet. We'll go ahead and switch up to that right there. And that's not it. Sorry for that. Guess we're going to have to go right here. There we go. We got a 15-day, as of yesterday, we got a 15-day performance of roughly 73% for the Triple Threat Trader HR. As you can see, as we mentioned, the Triple Threat Trader HR has been absolutely stellar. Last week, in fact, it was up 126% over the last 54 days as of last week. Actually, don't have the chart for the last 54 days over to the past week, however. We can look at that. Last Friday, and we're going to go ahead and look over at the portfolio. Should be right around, sorry for that, here we go. So yesterday, very quiet day, very few day traders trading. Losses on Wednesday, small losses, actually a gain for the Q trader, 3%, gain for the Delta B, 3.3%. On Tuesday, slight losses again, a little bit choppy, kind of a mixed day on Monday. Again, few winners, few losses. So as mentioned, been kind of a quiet day, as we have often said in this space that 80 to 90% of the profits are made on 10 to 20% of the trading days. So you definitely need to weather these little bumps right here and just stick around for the meteoric rises that we get. There's kind of an explanation of what we've got kept going over the last few days. Nevertheless, if you guys are interested in any of these portfolios, you can certainly go to the website. There you go, MiniAnalyst.com, and take a look at our portfolios. We've actually opened up the triple threat traders right there. You can go ahead and hit add to cart and enter promo code video right here under promo code, and you'll save an extra 20%. That's pretty much on most of our portfolios. So we have a 20% sale going on right now. What's more, if you subscribe to a year of the portfolios, you'll actually save another 20%, maybe 25% on your commissions. Actually, it's probably upwards of 30%. So you'll save on 30% of your commissions for the portfolios if you subscribe to a year, of course, and or you can subscribe to one of our quarterly specials and enter promo code video right there to save 20%. If you guys have any other questions, feel free to shoot us an email to admin@MiniAnalyst.com, or go to the website and chat with support team live. And hope you enjoyed the video and the daily analysis, the intraday analysis, and we'll see you next time.